This is a terrific story about nickel, and I'm really pleased to be here to tell you all about it today. With a target of producing about 150 to 200,000 tonnes of nickel per annum, Direct Nickel is set to become a world-leading nickel producer. We've got a game-changing business model and a new technology which is simply going to change the business of nickel forever. Definitely, with the sort of target that we have of 150,000 tonnes per annum of nickel production, it's definitely a billion-dollar company in the making. And of course, with laterites at the moment being very much no longer the flavour of the month, there's world-class resource potential out there, lots of laterite resources, very cheap. And then, of course, the company is led by a quality team with a proven track record. There's a unique convergence of circumstances that are actually going to make Direct Nickel into a world-scale nickel company. Traditional nickel sulfides are currently running down. That is to say, nickel from sulfide is running down at the same time as there's an increasing demand for nickel. The future of the nickel industry is in laterite. Laterites are plentiful, undervalued, and available very close to us here in Australia. And there's been a massive technological failure, which we'll talk about as the presentation goes on. And the final thing in the confluence of events is the arrival of DNI's new and lowest cost universal treatment process. Some 66% of nickel that's produced in the world goes to stainless steel, which we've described here as mankind's favourite alloy. It's used for just about everything, but as you can see from the pictures on the screen there, it's used for the very basic things that are necessary to a growing economy, and as a result of that, the developing economies have an increasing demand for nickel. Some 75% or 73% we say here of known nickel reserves are in laterite, but only 44% of production is coming from laterite, the balance of it coming from sulfides, the traditional lifeblood of the industry, but because of declining discovery rates and also because of increasing capital costs, nickel from sulfides is not something which is going to take us into the future. Despite that, there's over 120 years of the projected world supply for nickel available in laterites. Yet you can pick up the nickel in laterites for literally just a few cents a pound. Other processes, and everyone's familiar with some of these at least, have failed, and failed dismally, to solve the processing problem that is currently keeping nickel prices low in laterite and at the same time propping up the sulfide producers. Ravensthorpe, of course, is a spectacular crash, some $3.5 to $4 billion worth of capital expenditure, recently liquidated by BHP for $350 odd million. And of course, there's been serial failures of other projects. We mentioned here Vale's Goro project, which is still awaiting anything like an approach to its nameplate capacity in New Caledonia. And in the ferronickel field also, there are projects that are simply stalling. DNI, however, because it's a low-cost producer, is going to be profitable at very low nickel prices. So as a result of that, the realisation of the Direct Nickel dream is one that's possible as nickel prices fall, and that's something which the other producers can never ever hope to achieve. There simply is at the moment no better opportunity in any base metal, and I might say any precious metal, than currently in nickel because of this confluence of events that have occurred to depress the price. So what are nickel laterite ores? Well, for those of you who are interested in the technicalities, there's a nice summary there on the right-hand side. I won't waste time here today to go through it all. Suffice it to say that they are found, generally speaking, in tropical areas. They're a product of weathering. They are, generally speaking, in three layers. The top layer is an iron-rich limonite layer. The bottom layer is a magnesium-rich saprolite layer. And in the middle, a transition zone. Generally speaking, the further down you go, the higher the grade. The mining operation, generally speaking, is a little different to quarrying. The laterite resources generally are found in the top 50 or 60 metres of the profile. So they're really easy to discover. As I said, there's 120 years of them actually discovered and out there, and very, very easy to drill out. And to that extent, at least, relatively easy to produce. Where are they found? Well, most of the world's laterites are in fact in close proximity to us here in Australia. We have something like 70% of the world's laterites are in the Southeast Asia and Australasian region. But as you can see there from the map, we have, I'm sorry, I went back too quickly there, but as you can see there from the map, they're mainly found in the tropical areas. If you're going to ever decide to attack the nickel-laterite problem and develop a new process to deal with the problems that exist, the first thing that you'd be looking for, apart from a process that can actually work, and that clearly is something which the D&I process intends to do, is you'd be looking for something that is definitely in the lowest cost quartile of any of the processes that are available. And the D&I cost profile forecast by Acker Solutions from Toronto in 2 feasibility studies that we've done so far indicates that the D&I process is going to produce nickel at an operating cost of about 40% of our competitors. And when it comes to capital, we are looking at a $12.50 per annual pound of capacity cost, compared to upwards of $35 per annual pound of annual capacity for competing processes. That sort of difference, of course, is a serious disruptive technology. And one thing that graph doesn't show is that the capital intensity that's involved in using the D&I process, which is essentially a tank leach hydrometallurgical process, means that you can produce, you can build, I should say, plants as small as 5,000 tonnes per annum. All of the other plants in the world, generally speaking, are upwards of 30, 40 and 50,000 tonnes, and as a result require massive amounts of capital, large balance sheets, and basically are succeeding in keeping everybody else out of the business. The advantages and disadvantages of the D&I process, well, firstly, I mentioned that there were 3 layers in a laterite, and generally speaking, the existing processes are selective, so that if you wanted to use a ferronickel process, then you would have to mine the entire deposit, stockpile the limonite, and then treat the saprolite. And equally, if you were going to use an HPAL process, you would only be treating, generally speaking, the limonite, and you would have to leave the saprolite behind. Those processes are selective for a range of reasons. One deals, of course, and has difficulty with a lot of the refractory materials. The other one requires massive amounts of acid using existing processes. And the D&I process treats the entire profile. High recoveries of nickel and cobalt, over 95%. That's as good as you can get with the best of the HPAL processes. And the unique feature of the D&I process is that we recycle the reagent. Now, currently, other processes have to throw the reagent after it's been spent out with the tailings. The D&I process recycles about 95 or 96% of the reagent. The balance of it is easily neutralised. And as a result, we've got an environmentally friendly process. The problems with tailings, generally speaking, is that you have to toss out all of these nasty reagents with the tailings, and that becomes extremely difficult to manage. The technical intensity means how much effort do you need to put into actually running and operating a plant, much, much lower than an HPAL plant. Those plants, for instance, are really about as difficult a technical environment as you could possibly imagine. Massively high pressures, massively high temperatures. The D&I process is a low pressure or no pressure, low temperature tank farm, essentially a leaching process that gently handles the entire treatment of the laterite ore. We've demonstrated all of the core processes. We don't have any particular scale-up issues. Anyone in the room who's an experienced metallurgist will know that a standard tank leach system in the chemical industries generally, but particularly for this process, easily scaled up from as small as 5,000 tonnes per annum. We produce a mixed hydroxide product, around about 45% nickel content, And probably most importantly, this new technology is protected by a worldwide perpetual licence, which is exclusively held by DNI, and we have a very sophisticated IP strategy which surrounds it. Now, I'm not, you'll be pleased to know, about to take you right through the flow sheet, but suffice it to say that it is a very simple and very elegant process. Basically, the process leaches the material, and then using temperature and pH, i.e. acid-alkali balance, it selectively drops out the payable metals, recovers the barren solution that's left at the end of the treatment process and recycles it back to the beginning. Nothing could be simpler. And the reason why it works and the reason why it's so different, of course, is because we use nitric acid instead of the traditional sulfuric acid that's used in the industry. Nitric, by the way, is an acid that's well known to the industry. In fact, it's often used for descaling HPAL plants, for example. And it's always used in standard assaying techniques. But it's an expensive acid, and it's difficult to handle if you're not capturing the off-gases. Well, of course, our process does that. We want to capture the off-gases, we want to recycle them, and as a result of that, we have probably the most efficient acid that doesn't have any of the difficulties that sulfuric acid has in terms of dealing with what is otherwise an extremely difficult material to process. The whole thing takes 2 to 4 hours. You might want to compare that with one of the suggested competing technologies, heap leach. That can take anything up to 14 months, and then we'll only recover about 70% of the nickel. One of the really interesting things about the DNI process is that the characteristics of the nitric acid are such that we can use stainless steel, the very product that's made out of nickel, to contain it. That means, of course, that we're talking about standard materials of construction and relatively easy construction, no matter where that might be in the world. And here's a killer statistic. If we were talking about any other competing process using sulfuric acid, we'd be talking about using anything up to a tonne of acid per tonne of ore. Well, because the DNI process recycles the acid, we're using around about 20 to 30 kilograms per tonne, which is obviously a negligible and seriously comparable and much more competitive result. So low capex, low capital intensity, and very much low quartile OPEX. Well, where are we now? Well, we've taken this process now for some 5 or 6 years through every scientifically acceptable step that the industry demands to be able to bring a new chemical process to the market. This process was actually one that was essentially discovered and designed for the chemical processing industries in the US, not for nickel. It was used. It was originally intended to be one which would actually treat steel wastes. What we've done is we've migrated that across into the mining industry, using our knowledge and our expertise to be able to produce this result. And of course, that's the reason why you haven't seen it before. People haven't been looking for these solutions outside the mining industry, and we found that. Well, having done all of that, we're currently, as you can see from the picture there, well and truly on the way to finally testing the process. That's a photograph of only a few days old of our test plant in Perth, where we have a joint venture with the CSIRO, who are providing us with those facilities exclusively, and have also contributed equity to assist in the funding of that plant. DNI is, however, not a technology company. My partner Julian, who's been up here earlier, many of you know from the Sydney Mining Club, of course, is a geologist. Our backgrounds are in the mining industry, so we intend to be a mining company with a unique technology. And our process our progress, if you like, is very much directed towards building a significantly world-scale mining company. I mentioned at the beginning that what we see is a company producing around about 150 to 200,000 tonnes of nickel, which would make us about the 3rd or 4th largest nickel company in the world. So we're commissioning the test plant currently in Perth at the moment. We're also accumulating nickel laterite resources, and generally speaking, we're able to negotiate for these at a very cheap, if you like, price. I'll be talking about the Minbari project very briefly in a moment in Papua New Guinea, and that project is one where we obtained a 50% unconditional ownership interest for $0 and in exchange for a licence of the D&I process. And in the case of that project, as I'll mention later, we're also the operator. So very much a mining company with a unique killer technology that's going to give us an advantage that no other company can possibly have. Our business model requires us to only license the technology to projects in which we actually have an equity interest. So that means that what we'll be doing is bringing the revaluation of those resources prospectively, even before we get to the stage we're actually mining them, into our balance sheet and getting that revaluation up to the same value that sulphides are currently valued. Because obviously what we're talking about here is a process that can liberate exactly the same nickel in laterite in the same way as you might do with sulphide. So as a result of that, we're going to be compared with those companies. Our plan is to be producing 20,000 tonnes of nickel by 2015. One of these plants at about 10 or 15,000 tonnes per annum only requires 23 months to build, building up to 150,000 tonnes by 2020. And that would see us with a profit estimated at 155 million by 2015 and 700 million by 2020. So the double driver is obviously building a mining company that's going to have those sorts of potential upsides in terms of nickel production, but also revaluing the nickel laterite resources that we bring into our balance sheet right up front. Now the example obviously of where we go to, as I mentioned, is Minbari. There we have currently a drilling program underway and as I said, currently being managed by Direct Nickel. That will produce a JORC resource by the end of this year, very conveniently located to all of the infrastructure that you're likely to need. And that's a project that at one stage was estimated, I think in the late 90s by Anaconda, to have potentially some 5 to 7 million tonnes of contained nickel just in the limonite layer. That's before they got down to the high-grade saprolite layer. So by any standards, what Direct Nickel, of course, is doing, and we've already started to do it in the case of Minbari, is to actually bring these very, very large world-scale projects into our balance sheet to provide a sizable wealth creation for our stakeholders. There's a picture of pictures just a couple of days ago of the drilling program that's currently underway. You can see there the mining camp, which is up on the edge of a plateau, which is an ash-covered plateau, and which is yet to be drilled out. There's been some pitting over the years, which was the basis of the Anaconda estimates, but we're looking there at a very sizable project indeed going forward, and with some very quick results coming out. Going forward, Indonesia is a major target for us. You'll see there a quote from the Jakarta Post that's describing a very fundamental change currently to the nickel marketplace that is occurring in Indonesia, and also we understand in the Philippines, where the current mode of direct shipping ore is going to be stopped. The Indonesians have made it clear that direct shipping must stop by 2014. And that ore must be locally processed. So as you can imagine, there's an enormous interest currently in Indonesia in processes that can actually deal with what, in fact, Indonesia are extremely convenient, very large and very high-grade resources. We have a joint venture which we've negotiated there. We're ready to activate as soon as we've completed our capital raising. And that's expected also to be in the course of this year. That will bring many millions of tonnes of nickel in laterite into the D&I balance sheet. We're also possibly likely to announce before the end of this year, and maybe even sooner, a joint venture on a property with, in which one of our strategic partners, Teck Resources from Canada, has an interest, and that's at Araguaia in Brazil. As you can see there, Teck, CSIRO, Oz Minerals and Regency Mines are all not just strategic partners, they're actual equity investors in our company. and Acker Solutions from Toronto have handled all of the engineering that we've undertaken since our first feasibility study back in 2006. Direct Nickel was founded by Julian and myself in 2005. As you can see there from the list of steps that we've taken, we've ensured that we've had nothing but the very best partners right throughout the project. These people have participated very, very actively and at a senior technical level at every stage of the development of the company and of the process, and we're very proud to have them on board. And they're all very confident, obviously, in this sea change in the nickel industry that we're about to see. Our team, obviously, any company, if it's going to succeed, has to have a very capable management team. Julian Malnic, my partner of some 15 years. Julian and I, by the way, started a company called Nautilus Minerals that some of you may have invested in the past. That's a company listed on the TSX and on the AIM market, the London Stock Exchange, currently worth, I say currently, I haven't checked it today, used to be worth around about $500 million. We've done this before, we know where we're going, we know what it takes to bring new technology to the marketplace, and Julian and I probably quietly think that this one, Direct Nickel that is, has as much potential, if not more in some respects, than Nautilus. Nautilus won't be pleased that I've said that. Graham Brock, a metallurgist, project manager, simply an ace card when it comes to running a technical team, formerly Lion Ore. Richard Carlton, a mining engineer with great experience. Because we're building a corporation and we're not just tech heads and hoping that something might work out, we have Ian Bain, formerly Global Head of Mining and Metals for ABN AMRO as part of our team, and Ian is very much part of my core team assisting in the corporate development of our company. Now, I said $1 billion company in the making. I won't spend time too much on these figures. I'll just point to a couple of things. If you take a standard PE multiple of 10 and you look at nickel production of 20, 40 and 90,000 tonnes, you'll see that the sort of ASX valuation that potentially we could expect based on comparative companies, and here we're comparing ourselves, generally speaking, with sulphide companies, certainly is in the range of $1 to $6 billion. I'll leave it to you to decide how much you think the company might be worth if we can achieve our target of 150 to 200,000 tonnes of nickel per annum. The heading is offering, but the truth is we're in the course of listing the company on the ASX, and obviously any offering will be by way of a prospectus that will be issued. We're seeking to raise for Direct Nickel some $20 million at a pre-money valuation of $100 million. That will be money that will be used to complete and operate the test plant in Perth, and I might say that some of that may well be co-funded by some of our strategic partners. We will continue to develop the Minbari nickel project, and we'll execute the Indonesian joint ventures and other opportunities that we currently have to bring nickel quickly onto the books. Our target of bringing some 5 to 10 million tonnes of nickel onto the books, and if you can imagine what the revaluation of that might be, is almost enough on its own to make Direct Nickel a multi-billion-dollar company. And of course we'll have a really good news stream as we go forward, subject to the markets getting their act together. And that obviously starts with the proposed listing on the ASX, which we're expecting to complete in the fourth quarter, the Indonesian joint venture, the Minbari JORC statement, the test plant will be completed. It's all coming together. The Laterite testing program for various joint venture projects, we've got 3 in the pipeline at the present point in time, and then we'll be moving quickly to commercial production in 2015. So there you have it. Direct Nickel is not your usual explore, drill, define and develop opportunity. This is truly a focused opportunity to participate in a change to the nickel industry as a whole. We don't have any doubt at all that we've got the secret that has been eluding the nickel laterite companies, and the world is beginning to take us extremely seriously, and now's the opportunity to get in on the ground floor. So thank you. I'll be happy to take some questions.
Yeah, thank you, Russell, and great job, mate. You got me all excited listening to my own company.